Today, I have the pleasure to interview Shalin Madan, the co-founder of Formidium. You're also the chief investment officer of an asset management company. So we will definitely talk about the ETFs and probably allocation strategies because it's been such a hot topic. Thank you so much for joining this conversation with me.
Thank you. Thank you for having me.
You're just telling me that the company had a different name and you did a rebranding, and the last 2 years have been quite intense and hectic in a good way for you. So could you just tell me a bit more about it and the journey that the company has been on?
How much time do you have?
It's a good question.
Sidrania Fund Services was the original name of the company. It's now named Formidium. We launched the platform in 2017. In 2018, we took on our first fund admin client. The whole premise of the firm was to use technology to make the back office experience better for fund managers. Crypto and digital assets were not on our mind at all. I actually came in, I was running a hedge fund at the time, and I was the first customer of the firm. And that's how I got to know and understand the firm. And I thought it was fairly interesting, the model that the firm was pursuing, particularly using technology and a diversified workforce. Mind you, this is pre-COVID, so globally distributed workforce is something that's more commonplace today. But in 2018, that was a bit, a bit more rare. I thought it was interesting, and I seeded the company. And I was concurrently running my fund, had no real visions of, moving over to the back office side. But I saw an opportunity in digital assets and crypto during the crypto winter, not this one, but the previous crypto winter of 2018-19, where, I postulated that more funds would start, forming, and that they were going to need accounting help. And the fact that we had a technology platform could be very conducive to helping to build that. So we moved into the digital asset crypto market. We actually made a purchase of a firm called Triple Leo, which was a pioneer in the crypto fund admin space. A number of the funds you would recognize today use them. And we were able to integrate that firm, and we saw just an amazing trajectory of growth during the last crypto cycle, crypto summer, on the basis of that we could handle some of the more complex areas for emerging managers, including DeFi and NFTs and high frequency trading. So we're kind of known for that today as well. Really complex areas of digital assets. Formidium is the the go-to firm.
How did you identify the opportunity in 2018? That's the time that the future ETFs were approved. There was a lot of noise around crypto, but at the time it was perceived as this speculative investor. So why did you think that there will be a gap in the market for an accounting firm when it was still perceived as something quite speculative?
It's a really interesting question, and it's something that's now kind of formulating everything that I do as both an investor. I shut down my fund, by the way, but I am a personal investor in digital assets and elsewhere. And it's really informed my decision. So I was noticing, I ran a quantitative fund, and I was noticing some very weird things in 2018 and 19 in the markets. And it really got me to think. Now, mind you, this is when German bonds and even parts of the treasury market were negatively yielding, if you can remember this. We had negatively yielding bonds in this world across the developed world. And it was just quite surreal because fixed income was a big part of my strategy. And that's what really got me to scratch the surface on crypto, and Bitcoin, of course, was where I started. And, I won't lie. I was a bit of a naysayer in 2017. And when the bubble popped, I was like, hi, I told you so. But I think that the troubles in my own asset allocation and my own investing in 2018-19 greatly informed me to do some more digging around crypto and digital assets. And that's where I became interested. And when I became interested as an investor, it only became natural that there would be other services needed around that for people who might want to professionalize, investing in digital assets.
That's so interesting. So back to Formidium, you guys have 28 billion worth of USD in assets under your administration, and it's over 1,000 funds, different asset classes, and it's data that I found on your website. Please correct me if I'm wrong. But how did you grow so rapidly and so much? But also, do you feel the pressure because so many companies rely on the technology that you provide? So how do you feel about it?
I will say that the hyper growth that we experienced in 2020, 21, and 22 was probably once in a lifetime for any entrepreneur. An amazing experience to not only manage through it, but manage through it successfully. I would say that the last couple of years, of course, have seen a slowdown in that growth. I think like any other Web3 related company, but we held our own. I think that Formidium, as a fund administrator, as a Web3 accountant, if you will, it's a relatively safer space. Everybody always needs an accountant. That was kind of the impetus for me to really invest in the firm to begin with and move into Web3. Because when I was first thinking about it, if you recall my story, I wasn't sure. I didn't know. So to answer your questions, I didn't know. But I thought that accounting would be a kind of a high Sharpe ratio, for those who understand that term, a high Sharpe ratio way of getting the digital asset crypto exposure and the growth in the asset class that I wanted personally as well. Managing through it was tough, to say the least. Providing the level of service and accounting that people require in an asset class that we ourselves were learning about was challenging, to say the least. But that was 2021 and 22, and I think that as time has gone on, of course, we have all learned this asset class. We've learned where the problem issues are. Having a tech platform, an internally grown tech platform that we have built, that has helped us tremendously in terms of being able to automate many more parts of the accounting process in digital assets and crypto, which create a lot of efficiency in what we do. So what the world looks like in 2024 for us is a lot different than 2021 and 22. We're just far more skilled in the asset class and more mature. And I've just add one more thing, kind of a level of irony of the last couple of years is that there's actually fewer people now in this space in terms of what we do. People just dropped out, but we have been absolutely committed to the space and honing our skills and honing our technology.
Oh, wow, that's interesting. Why are there fewer companies that provide similar services when the number of companies that would need them have increased? My prediction, simply based on supply and demand, would be that if there is a higher demand, then the supply of the service would increase as well. And not to challenge you on this, but do you have any data to support that?
Do I have data to support it? No. I'm in the industry on a day-to-day basis, and I see who we're competing against. I see the growth in our own business. What I would tell you, though, is something that would make sense, I think, logically. This is a very difficult asset class to administer and do accounting for. It's not like you can take existing accounting infrastructure and say, you can airdrop yourself in and say, well, I think I'm going to do DeFi accounting. So to begin with, there's a number of people in our space specifically, I think there's much higher barriers to entry, of course, in fund administration than, say, perhaps, opening up a tokenization platform. There was, frankly, people were unable to do it profitably. I think that's the short answer I'll give you. Mm-hmm. So very expensive to administer, and fund sizes are still relatively small, say, compared to the credit markets or private equity. or even traditional venture capital. The fund sizes are much smaller, and that's not profitable for a lot of our peers. But for us, it is because of this focus on technology and distributed workforce that we've created over the years.
Okay, yeah, I would say that I'm inclined to believe in that because it makes a lot of logical sense. So I want us to delve in deeper into Formidium because there is so much going on and you provide so many different services. So I think that there are three main verticals. So you have the full scale fund administration services,
Mm-hmm,
and then you have the crypto fund taxes, and then you have the technology solution like Universe.
mm-hmm, mm-hmm,
Uh,
mm-hmm,
could we go one through those one by one? And I'm
mm-hmm,
really interested in the proprietary software platform that you have called Seamless. I've
mm-hmm.
watched a couple of videos of how to utilize it, and it seems very interesting because it captures data on the type of trades the traders execute, and then you can see the investor statements at the end of the month or whatever the week, whatever
Mm-hmm.
time period you put in.
Mm-hmm.
You can see the realized and unrealized profits. You can see the P&L, and I think is very interesting. So could you just tell me a bit more about it, but also the type of companies that employ it and what's the utility behind it? Such a loaded question, uh, but I'm really fascinated by this particular service.
Right. So you mentioned Formidium handles fund accounting for Web3 funds, but Formidium is a multi-asset class fund administrator. I'd be remiss if I didn't mention that. So we are actually have expertise across every asset class: real estate, private equity, venture capital, crypto, as we mentioned, hedge funds. So that's the first thing. We handle taxes. Crypto taxes are an incredible pain. And they're only going to get more painful as IRS regulation comes down the pike in 2025. So we're quite bullish on that area. One thing that we noticed, that I noticed after FTX, was I remember reading an article in the Wall Street Journal about FTX's accounting. And if you think about what happened with FTX, a lot of their downfall was in a misunderstanding or a lack of knowledge around where their position was with respect to their firm. That's accounting. Everything was being done on QuickBooks. Uh, to me, that kind of rang. It turned on a light bulb, I should say, in terms of hey, the opportunity for us doesn't just have to be in fund and administering investors. It could actually be in helping to administer companies that take Web3 payments, because the issue is the ability to do accounting around Web3. So whether your investor take it as a payment, it's the same from an accounting perspective. It's the same issue. So that's a company called Razor State, where we handle Web3 startup accounting. Any startup accounting, but we're just known for Web3, of course. Um, we have a marketplace, which is something that we launched, where any startup or fund manager can list their fund and make it visible to high net worth investors and community members, including service providers, should they need an auditor or a lawyer. So we have a bit of a directory that we created. Um, so those are kind of the main areas. We have a platform called Universe, which is about to be rolled out, as well as Crypto Back Office. And what these tools are moving to the next evolution, I think, for our firm, which is allowing managers to effectively giving them a self-serve solution where they can take our accounting system, and should they want to do the accounting internally, perhaps they don't want a fund administrator. You don't have to have a fund administrator as a startup fund. You can simply use our software for computational purposes and just to calculate how well you've done. And we have tremendous API connectivity. It's very easy to establish, along with what you mentioned, the cadency, the cadence of the reporting that we do, which can be monthly, weekly, or even daily. We actually have daily reporting now for our funds, should they want it.
Yeah, I definitely was impressed by your API connectivity because you have over 150 exchanges, and
Yeah,
I think it's really good.
yeah.
Um, especially for like bigger companies that might be using multiple exchanges?
Well, that's exactly right. And so one of the benefits of building our own software, which you had asked about, is that, when our clients need something, we can develop that API connectivity as needed. Whereas if you're just simply selling software on a third-party basis, it might not be worth your while for one wallet or one exchange that, that client's the only one who's using it. It might not be worth your while. And or you'll, as a client, you'll have to go through some sort of a special request process. And with us, since we are on the vanguard of Web3 investing, our clients, that is, that makes us, in my opinion, on the vanguard of technology production in Web3 accounting. So, these are what. So I think that's the kind of the takeaway that I also take from investing as well, which is that I really like funky stuff. I like to invest in it, and I want to do the accounting for it. I think that that's where you get the alpha. That's where you add the value to the community, is taking on tasks that nobody else will.
Yeah, could you just tell me a bit more about Seamless? I know that you touched upon it, but I would like to know more about the type of companies that use it and what's the value that it brings to them. Because, and actually, what's the problem that it solves?
Yeah. So Seamless is Formidium's proprietary general ledger accounting software. It handles fund accounting. We have a sister piece of software that we've created that handles corporate accounting. Generally the same if it's a general ledger accounting system, but you got to change the names of the fields and things like that. We built Seamless because we thought it was more appropriate for a firm that was going to handle cutting edge and complex asset classes to have its own accounting system, because you couldn't buy these an appropriate system off the shelf. So that could have been hedge funds 10 years ago, or CTAs, or venture capital, but today that's Web3. So as the markets evolve, and tomorrow it could be something else, by the way, we don't know. As the markets evolve, we're able to evolve our software in real time, which I think gives us a distinct advantage over those using third-party software. That's the first thing. The second thing is that it creates much more scalability, right? So we have a large back office center in India, as an example. All of our accountants, of which number over 300, by the way, is the largest group of digital asset specialists in the world, I think. I don't know that as a fact, but I suspect that 300 is quite a bit. And that allows us to give a seat and access to everybody in our firm without having to pay a license fee that you might have to pay to another third-party software. So, in sum total, what this allows us to do is, number one, tackle multiple different asset classes, right? So if you were to take a piece of crypto software today that advertises itself for accounting, could it handle real estate? Could it handle private equity? The convergence of these asset classes might require an ability to span all asset classes as we understand them today. Perhaps they merge in the future via a token, but the ability to understand all different asset classes and have an accounting system that can handle that is key. And to my knowledge, to date, we are the only one that can do that. Yes, there are other crypto fund accounting platforms, but none of them are as expansive as Seamless, from API connectivity to multi-asset class capability. So I hope that gives you an understanding of why one would want to have their own software. It's really an ability to pivot very, very quickly as this world is changing much more quickly.
Yeah, and just to touch a bit more upon the business model, is it a retainer, or is it based on the services that you provide? Could you just tell me a bit more about it?
Yeah, it's a little bit of all of the above. So it is generally we have a basic monthly fee that we charge clients. And then based on the size of the client, we might charge a percentage of assets under management, usually quite small, but it's some form of a fixed payment plus assets under management fee.
Okay, cool. That's interesting. I just want to touch upon the 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 seamless tax, because I know that you have a software that's called Seamless Tax and is developed predominantly to deal with tax issues. I mean, not
Mm-hmm.
issues necessarily, but with tax. And you handle staking, lending income, and airdrops. I know that you're not a tax advisor, but I was wondering whether you could tell me a bit more about the tax regulations about around airdrops. Um,
Yeah, so not a tax advisor, but what we've had to do over the years is come up with best practices from the traditional world and figure out how that could apply to what's going on in crypto. So perhaps certain aspects of crypto, uh, like yield farming or staking, as an example, that might be, I'm just saying hypothetically, somewhat similar to how dividends might be treated. So how you treat certain phenomena in digital assets and crypto is a big part of, I think, why we've been able to take on so many clients. I will say that tax authorities actually come to us and figure out what we're doing and then figure out if that's best practice or not, and then they start. Regulation never comes first. Regulation is ex post to what the market is actually doing. The regulators don't know anything until they consult with the private sector that's usually at the forefront of these things. So to date, we have, I believe, the most number of crypto tax clients. I think we have over 600 clients in total for taxes, which is a pretty phenomenal amount, particularly because these are institutional grade type taxes. This is not somebody's, personal crypto tax return. This is fund managers ranging from millions of dollars to hundreds of millions of dollars, if not $1 billion.
you just mentioned that tax authorities come to you before they run and think about regulations. Could you disclaim in what countries, or you don't feel comfortable doing it?
No, I don't feel comfortable speaking about specific authorities. I will say that most of our taxes, if not all, are in the United States. Um, we are a global firm, however. We handle, so if you think about crypto, by the way, most of the fund formations are in the United States or somewhere in the Caribbean, usually the Cayman Islands. Cayman Islands doesn't have tax. Cayman Islands has compliance issues, and that's another area where we have, periodic conversations with the various authorities. But globally, it's still a fairly nascent asset class. So taxes for us are primarily a United States phenomena. Compliance is a global phenomena.
Yeah, okay. That's interesting. Earlier on, you alluded to the fact that the tax industry will become more prominent and
Yeah,
potentially more lucrative. Could
yeah,
you tell me a bit more about it, and what's your thesis on it? It's
yeah. So it's a little known kind of nugget in the tax world is that the IRS is contemplating. This may have been passed already by the time this video comes out, but the IRS is contemplating mandatory issuance of 1099s, but we'll call them 1099D for digital. And that thus far, there's not a regulatory framework around taxes. I made some crypto, maybe I'll report it, maybe I won't. Obviously, we are good citizens, we report our taxes. But going forward, this will be mandatory. So much in the way that 1099s are issued for interest or dividends or other matters in the United States, there will be a 1099 for digital assets. That is what's being proposed, and that would be for tax year 2025. So if we think about it right now, um, we are in tax year 2000, and we're handling 2023, or that just ended, so we're in 2024 now. So we're very close. 2025 is next year, where the IRS will be putting a lot of scrutiny on crypto taxes, particularly with respect to 1099 reporting.
Oh, wow. That's interesting. And would that be primarily for, I don't know anything about it, so please educate me on it.
Yeah.
And excuse my stupid questions. But would that be primarily focused towards businesses, or even retail investors would need to disclaim? Because I know that it's such an ignorant thing to say and definitely not a tax advice. But I know that a lot of people that are within the crypto industry have not declared their taxes because at the moment it's comparatively challenging for the government to track them down. And definitely not something that I'll advise anyone to do. But it's also important to acknowledge that that's happening at the moment, and that's the dominant narrative within the Web3 world. So this particular um, bill or a law that will potentially be implemented by the end of this year, do you think that it will be targeting retail investors or institutional investors?
Well, institutional investors are already compliant with tax authorities. Um, we'll just let's just assume that by and large. uh, um,
Fair point.
I would I would say that retail investors, this will affect retail investors definitely on centralized exchanges, which are uh, kind of overseen right by the federal authorities. Uh, with DeFi, I mean, the answer I will give you is yes, you should pay your report and pay your taxes. Um, what sort of ability will the government have to actually monitor that? I don't know.
And again, we're just speculating on it, but do you think that it will increase? It will definitely increase with time, but when do you think they will reach a level where they will enforce everyone to pay? Otherwise, there will be certain penalties, and they will be able to track everyone down.
I believe that that is no more than a couple of years away. I think we're very close to that point. It's going to be increasingly more difficult, I think, to find places for people who want to skirt the law to, to play hide and seek with the governments.
Wow, that's comparatively short. I always make a joke that whenever I talk about taxes, I always ask for a friend. It's never for me. I would never consider it. It's always for a friend. uh,
Same here.
yeah. While I was prepping for the interview, I was going through your website, and something that caught my eye was that your philosophy is, I would say, comparatively simple, and that's that if technology can't reduce the cost of operation, then it's not doing its job. Could you please elaborate on it, and why did you come up with this statement, and what exactly does it signify for you?
Great question. Um, so, believe it or not, in the year 2024 that we live in, a lot of accounting is still done on a spreadsheet. Good old Microsoft Excel. And there's really, fine, maybe the formulas are better. Maybe you can use ChatGPT. Maybe there's ways to make that more efficient, right? But at the end of the day, a spreadsheet is not appropriate for large volumes of information, which is what digital assets really represent, particularly decentralized finance, particularly. Um, you're on a centralized exchange, just one API connection, pull all the data. Okay, fine, not that complicated. But DeFi and NFTs and other parts of our ecosystem are absolutely super complex, and you need technology. You need a technology solution. You need a ground up technology solution, and that's what we are creating, are creating, and continue to improve. Now, if technology, you would expect technology costs over time to go down. As such, if you have a technology platform, the cost of the accounting should become more competitive. So to give you an example, in more traditional asset classes that we know hedge funds for, like long short equity or CTAs, 99% of that should be automated. So if you're going to a firm that has not automated that, more than likely you're way overpaying. And I'm not sure why you would do that, because you expose yourself to mistakes to begin with, and you're paying more. So you're paying more for mistakes. I don't know. Doesn't make sense to me. Everybody's different. But with respect to having an automated solution, you can not only produce it at a better cost, you can provide it with 100% or 99.9%, we'll say, accuracy on the first go. Okay. So we expect that costs should be going down for accounting, particularly the older and more established the asset class. As an example, if somebody were just trading Bitcoin, this should not be difficult for your accountant to handle, and it should not cost a lot, not by now. And so I don't think that the people really understand this concept with respect to accounting. I think they get kind of intimidated, or they just go with whoever their friend recommended. No, it matters. It matters a lot, actually, because if you can't complete the accounting, you can't complete anything with respect to your fund. Like, how do I know as an investor how you did? Where's my investor statement? How do I file my taxes? How do you file your taxes? How do I file my taxes? So these things are very important. And I think that a lot of startup fund managers are very enamored, and as they should be, on the potential returns around crypto and digital asset trading, without understanding that unless you're just trading your own book, and if you want to take outside money from people like myself, as an example, you have to have your house in order, and that includes the back office.
Yeah. While you're talking about it, I just have limited knowledge on the topic. So could you still man the argument of why companies would prefer an accountant over automation? Because there must be a reason for it. And I guess a recommendation from another owner plays a particular part in it, and that influences their opinion. But I'm not convinced that that's the main reason that they would choose an accountant over an automated solution. So what's your take on it?
So I think that, like anything else, the newer something is, the less trust people have in it. So if there's a company that has been around for 40, 50 years, you'll brand name recognition, you're going to go to that company. And maybe as you should, by the way, especially if you're a large company, right? You're a large corporation, you're IBM, you're Microsoft, you're going to use a big four accountant, and that's the end of that. Money doesn't matter. Where the problem occurs is in a couple of areas. Number one, if you're a startup, you have a dream, you want to raise money from some friends and establish a track record, and you're willing to spend 5-10 years developing your fund, there's really very few solutions for you. Okay. Let's say now this fund is in crypto, it becomes even more challenging. And first of all, the large companies don't have the infrastructure to even handle this. Or if they did, or if they threw a lot of manpower at it, you can just absolutely imagine how much that's going to cost you. So they're just really not, it's not cost effective. So that is where what we do, I think, comes in, very handy, is we can come in at almost any fund size, any tenure, any asset class, and our solution can work. So that's the reason you would want technology. Now, we're not in a world, to be fair, we're not in a world that's just only technology. Like, it's not that Formidium says, well, here's the technology, and here you go, and that's it. What we're doing is we're using a combination of technology and people. Okay, so I always bring up QuickBooks. If you know QuickBooks, it's an accounting system that's used, bookkeeping system that's used, quite a lot in the United States. Um, you could do your QuickBooks, and a lot of people do use their own QuickBooks, but a lot of people have somebody else as a bookkeeper handle their QuickBooks. So if you think about it, QuickBooks is a software, but I still don't want to do it myself. I'm just going to hire somebody else to do it. And that's kind of the Formidium model. We built our own software, QuickBooks, if you want to call it that. And we have a number of highly qualified people in order to complete the work for our clients. So that's really our model.
Yeah. What about mistakes? I guess they're inevitable, and sometimes we make honest mistakes where you don't want to deceive the system or you don't want to cheat, but you just make a mistake. So the way that I'm thinking of it is that if an accountant makes a mistake, then we can easily attribute it to him. And if we, in the worst case scenario, go to a legal case, then the accountant will take full responsibility for the action. There probably won't be a legal case, but just in case there is a fine associated with it or anything goes wrong, then you can just go to the accountant and hold them responsible and accountable. Would the same model apply to Formidium? If there is a
Yes,
mistake, would
for sure. Mistakes can happen. Mistakes can happen in our business. Mistakes can often be come from both sides, by the way. So if the accountant is fed wrong information, garbage in, garbage out, as they say. Certainly, there could be a misunderstanding of what the manager is trading. Perhaps communication lines are broken. Mistakes happen, and luckily, I think that when we were looking at our progress report with our clients, we have the most number of satisfied clients today than I've ever seen as a percentage of all clients. I think it's like 99% satisfaction. So, a client relationship score is what we look at. So I'm very, very excited about the fact that mistakes are not a common feature for Formidium, but they happen. They happen with everybody. It happens from the biggest to the smallest. And when they happen, we own up to it.
That's amazing. That's a really good number. 99%.
Super
Is
excited right now with the
high.
client happiness scores. Yeah.
Wow, that's good. I just want to ask you, because of your professional background and because you're a chief investment officer and you're a retail investor, you've been in the industry for a very long time. I just want to have a quick conversation about
Yeah, sure.
your current investment thesis and what you're thinking about the ETH ETF approval. Where is it going? How do you think is the best way for mainly Web3 natives to capitalize on it? Because I don't think that anyone that's not a Web3 native would even be aware of it at the moment. But it's such a hot topic within our community.
Yeah. Well, my macro view is that I'm very confident that we are in stagflation. I obviously put the blame on the central banks for that. I think the question is, I'm not in the hyperinflation camp yet. There's reasons for that. I think that what we're seeing now is a compounding of mistakes that occurred due to COVID. So I think we're still suffering from the policies, the very misguided policies, frankly, that we saw during the COVID-19 pandemic. And what we're seeing now is a resurgence in inflation. There's no doubt about that. And all of my models are saying that as well. The problem, of course, is that the central banks and the governments don't want to allow for the natural business cycle to occur. They're thwarting the natural business cycle. And the problem with that is that we live in a world of finite resources. And when you push continuous demand against a world of finite resources, you get prices going up, right? And so how am I positioned? I'm positioned for stagflation. I've been long commodities. I'm long oil. I'm long copper. I'm long fertilizer. In my more traditional allocation, I'm totally long crypto, as you can imagine. I within crypto, Bitcoin, of course, it's a no-brainer, I think, to be a core position in one's book, given the supply-demand dynamics that are occurring with the ETF, and now the halving having been completed. I don't think we've seen anything like this before. So I do think that there is a tail risk for Bitcoin. I've been saying this publicly now for the entire year before the ETF was announced, that there could be an accident in Bitcoin. And when I say accident, I mean a right tail accident, which is a moonshot by Bitcoin. It could be once in a lifetime. It could be not congruent with stock to flow or whatever logarithmic model or whatever model everybody's using, because the ETFs just provide a source of demand. We're not really, I don't think we really model that. That's my opinion. So
That's
the ETFs, yeah, the ETFs are allowing for quasi-institutional adoption earlier than we might otherwise have thought. I guess it makes sense that it's Bitcoin. It makes sense. It's not going to be some shitcoin, but we should live in a world of constraints and rules, right? And the institutions are not allowed to buy crypto. But an ETF is a wrapper in the stock market. Well, then it's okay. I could buy it. It's stupid, but it is what it is. It's probably a middle ground until the institutions are allowed to buy digital assets. But it's highly bullish. An Ethereum ETF would be highly bullish. All these things are highly bullish. There's just no way there's no other way to describe it. Now I can give a bearish argument if you'd like. They might actually, what's the word? Front run or push forward. Sorry, push forward demand, whereby institutional adoption could occur in these asset classes that have ETFs early, and then the next cycle they might lag because we might be faced with the same situation where they still can't buy digital assets. That's a possibility whenever that cycle is, 2027, 28, whenever that is. But that's so far ahead right now. It's not even worth thinking about. In the here and now, I do think that the ETFs are highly bullish.
Yeah. Wow, there's so much to unpack. But just to bring you back to stagflation, I think it's characterized by high inflation, high unemployment, and low economic growth. So high inflation, high unemployment, low economic growth. Do you think that we tick all of those boxes? Not to push you back on this or challenge you in any way, but I'm just not 100% convinced that we have a high unemployment and high and low economic growth in the US.
So economic growth has to be measured, I think, in real terms. Real economic growth, if I recall, in the last report was sub 2%. Nominal is around 5.5% or so. But that has to be gauged against a 5.5% risk-free rate, and possibly going higher. I think that's been my thesis, which is obviously very contrarian, that rates could actually go higher before they ultimately go lower. Unemployment, if you look at the various measures, is ticking up. There are a number of states in the United States, take California as an example, which are absolutely seeing unemployment go up and are in recessions, I believe. But you're right. It's a forecast. Are we in stagflation right now? No. I think we're in a little bit of a sweet spot. So if you think about how cycles work, when you're at the bottom of a cycle, take 2016 or take 2012, inflation tends to be very low. There's some slack in the economy. The central bank has some wiggle room. They can cut rates. That is not what we saw in the last couple of years. So we know that we saw a demonstrable slowdown in the economy. That's a fact. globally. And there are many countries like the United Kingdom, Europe, at large, which have had declared recessions. Uh, and yet we saw no rate cuts or very few rate cuts. I think the ECB's cut once so far. The Fed has certainly not cut. That's amazing. That's amazing. There's been so few rate cuts in the face of just persistent declining economic growth. And so I attribute that to the fact that what that means is that demand is still too high relative to scarce resources. And I'll just go back to that. And so what that infers to me is that potential growth is just a hell of a lot lower than what we might otherwise have thought. I could argue that 1% growth could be inflationary at this point. Above 1% growth could be inflationary. That's what it means when potential growth is too low. Ultimately, what that tells me, and usually historically, recessions have been the mechanism to fix this, right? You get a recession, you get slack in the economy, inflation comes down. But governments have their credit cards out. People have their credit cards out too, if you look at the data. And they're keeping demand higher than it otherwise should be. At some point, something is going to crack. And usually that's the bond market. So I think that kind of gives you an understanding of why stocks have been going up, why crypto is going up. We're in a sweet spot. It could last another 6, 9, 12 months. Absolutely. I expect this crypto cycle possibly last 12, 18 months as governments start fighting tooth and nail to counteract the increasing unemployment that I'm forecasting. But at the end of the day, stagflation, this is why it's so confusing for everybody. Everybody thinks about unemployment. Oh, it's unemployment, it's a recession. Yes, but you always think of recessions as having lower inflation. And there's nothing to say that has to be the case. So I think that we could very well be facing an inflationary recession.
Yeah, I completely agree with this. Definitely in a sweet spot now, but it doesn't look good because I was checking the data a few months ago. No, towards the end of Q1, and there was like over 1 trillion in consumer debt in the first quarter of 2024, and that's insane to me because the number keeps going up. And if people are putting everything on their debit cards, credit cards, then that's a problem because we're just creating a bubble.
But, 100%. And delinquencies are going up concurrently, but the delinquencies are occurring in what people describe as subprime. So there's no doubt in my mind that the middle class and we'll call it below are getting decimated right now. I mean, I have a lot of empathy, to be honest with you. I grew up poor, but you know we have not yet had it affect we'll call it the prime borrowers and the higher income, higher asset borrowers. If anything, I mean, it's an incredible environment for me to invest. I mean, my money that I don't feel like investing makes 5.5% for me to do nothing, and the money I feel like investing is just going up every day. So this is a spectacular environment if you have money, and I can imagine this is going to create a lot of friction. However, the Achilles heel of the entire system is when asset prices go down, because once the prime and the higher income people are affected, the lower income people, they have nowhere to go already, then you're in trouble. That's when you get a financial crisis. It's possible. There's no doubt that the Fed and the governments, though, will fight tooth and nail before that to counteract that. But we may have no choice. We may have no choice if the bond markets become unruly.
It's insane because everyone was talking about recession around 6-7 months ago, and then soft landing, and now no one talks about it anymore. And what I've noticed is that it normally happens when no one talks about it and no one expects it anymore. So I definitely agree with everything that you say. Do you think that microeconomic factors will shorten the crypto bull cycle, because we're no, we haven't. I mean, we are at the beginning of it. I think that we just need a catalyst for us to explode, go to the moon. If the ETH ETF gets approved tomorrow, I think that it will be. It's a tricky one, but it might be one of the reasons. It just might be the catalyst, the trigger that we need. But then, as you said, like because of the microeconomic factors, something will break within 6 to 10 months. And I think that we know our bull runs are normally around a year and a half, too. And if something
Right.
breaks in the next 6 to 10 months, then it would literally shorten the bull cycle by half.
Right.
And
Right.
how do you position for it?
I I've been thinking about this, and it's a really good question. What you're saying is possible. I will tell you that one of the reasons why I haven't been as I've been ambivalent about this cycle. I sit in an incredible seat, by the way. I see all the flows. So I see when the investors are investing, I see when they're pulling out. I'm a contrarian at heart. I love the fact that there's almost no investor interest right now. That to me is an incredibly bullish sign. You want
Mm.
to go into things when there's less interest. Now, Bitcoin, there's more interest because of the ETF, so I'm not going to deny that. But in altcoins, I mean, what's going on in altcoins? They're dead, right?
Yeah, man.
So I think
Apart from Solana, I mean, now
Solana is
there was like,
unbelievable. Yeah,
yeah, there was a
I was.
correction, but oh my days.
Yeah, I think there's Solana. There's a handful of kind of Bitcoin DeFi coins, Bitcoin ordinals, right? There's
Hmm.
anything that's around Bitcoin, I think has done okay, although the last few weeks have been pretty rough. But you're right. There's a handful of projects near like tokens, AI around certain themes. It's possible this entire cycle could be more of a crypto pickers market because
Hmm.
I am not yet seeing the flows, and I don't know. I don't know if people are so burned by FTX and what happened in the last cycle that they might just decide to skip this cycle. So it might not be as pronounced of a cycle. It might only be an ETF orientated type cycle where you've got this like technical thing occurring with the ETFs, which is why, to be honest with you, most of my personal investing has been around Bitcoin and the Bitcoin ecosystem, be it ordinals, runes, Bitcoin DeFi, etc.
I personally don't think that we can have a ETF driven cycle because there's no way it will generate enough inflows
I agree. Yeah.
within a very short period of time for it to be a trigger for a new cycle. We need either utility or we need some type of money where people are going crazy about it and they invest into it. So I've been quite bullish on deep in projects and tokenization of real world assets.
Yep.
I think that this could potentially trigger the next bull market, or potentially the ETH ETF. But even that, it's not. I mean, I think that price is very closely linked to narrative. So sometimes, if you have a good enough narrative, you don't need the event to be reflecting the reality. As in, like, if you have a ETF approved, it doesn't necessarily mean that we'll have enough inflows for it to trigger the next bull run. But because everyone is going crazy about it, and there's so many retail investors waiting to put their money into something, and the reason that I'm saying this is because GameStop went crazy because there's so many people waiting to invest into something, and we saw that
Mm-hmm.
there's like everyone was like on the sideline. Roaring Kitty just posted something and was like, "Oh my days, let's put my money." So I
Right.
think the money is there. We just need a narrative. We need a reason for all those people to go crazy and invest again. But we'll see. I guess it's quite challenging to make a prediction at this stage.
I think it really depends on bond deals. I think I would watch the bond market. As I mentioned before, there was a big fixed income orientation in my former hedge fund, so I understand uh, bonds. I understand bonds in relation to macro markets,
Yeah.
and it's really about uh, if we start seeing a bearish steepening of the yield curve, which I don't think is out of the question. If you recall the gilts market, which brought down the Liz Truss, right, in 2022, I think it was, right? Um, uh, you know, why can't that happen in Europe? It seems to be, we're seeing what's happening in Japan, of course, with the yen and the pressure on Japanese bonds. Why can't it happen in the United States? These things are all, I think, within the realm of possibility. And when and if they occur, that's when you get, I believe, an amazing buying opportunity, because I have no doubt at that point the central banks will have to step in, and that's how you get the rally, because
Mm.
they're not allowing markets to adjust to where they want to be.
And is that related to the crypto market or more of the Web2 market?
I think it's definitely related to the crypto market, because crypto is just an easy liquid manifestation of, okay, I can get, profit right there. Whereas when you think about venture capital and Web3, these are like 10, 15 very long lived investments where people have to make commitments to you. You literally have to commit your money and saying, okay, I'm with you for the next 10 to 15 years. It can't be a spur of the moment decision like, oh yeah, I think I'm going to invest in this venture fund because I'm bullish over the next couple of years. It usually does not work like that. So um, we're not seeing the flows yet into the funds. We're seeing a trickle. I know I've been investing personally. Um, I'm a contrarian. I've got a lot of dry powder. I like to wait. So I'm committed to this asset class, and I believe that if nobody's investing in it, that must be amazing opportunity. That's my monkey brain basically coming up with the logic of why I should be investing.
What's your current portfolio allocation? You don't have to disclose. I'm just
Yeah, no,
wondering.
it's okay. I give a broad asset allocation. I mean,
Yeah.
I, I always tell people my age. I'm almost 50 years old,
Oh,
and
you look younger. I'll give you that.
thanks. And so I don't take as much risk as I used to. So there's amazing opportunities to be had. The core of my portfolio is in lending, floating rate. As I mentioned, I'm pretty bearish on interest rates, so you'd want to be in floating rate bonds, bank loans, private debt. That's a good portion of my portfolio, but I carve out half of my portfolio for risk, and within that risk, a good portion is crypto, and within the crypto, a good portion is degen crypto. Okay, and within the other parts of my risk, it's pretty much commodities. It's copper, palladium, gold, mining, oil, uh, fertilizer. I think climate change is a big deal. Water. I think these are areas that a lot of Web3 participants don't really think about, but there's actually a lot of opportunity. That's the original degen, by the way, the commodities market.
That's so funny. Um, could you explain floating interest rates to me, because I don't have a good understanding of
Oh,
that
this is
concept.
it's pretty simple. It's just basically pegged to the central bank rate plus a spread. So if interest rates go up, you don't lose any money because you're not taking the duration risk, right? You just basically collect more as interest rates go up.
Oh, and how do you invest in them? Could retail investors capitalize on
Sure,
it, or is it more?
sure. There's a handful of ETFs in the United States, like the bank loan ETFs and the floating rate ETFs, which people can look up. They're pretty liquid. Their fees are very reasonable. They're issued by iShares. Um, there is, I think one is also issued by Barclays, I want to say, but I'm probably dating myself now. But but so you have those. I'm not taking risk in anything that is pegged or fixed to the interest rate markets because I believe that we are in a reflationary and or stagflationary cycle. So you don't want to be long rates in that sort of environment. You'd want to be long cyclicals. Now, historically, again, we thought of cyclicals as being positive for the economy. But when you have a situation that we're in right now where demand is not really that high, but supply situations are really, really bad in copper, as an example, and its utilization in artificial intelligence and EV and all these different technologies we're seeing, you have a chance for a lot of accidents occurring within multiple numbers of markets. So the kind of the phenomena we're seeing in Bitcoin with the ETF, where we're talking about supply demand imbalances, this is the same thing that's occurring in real world assets that we use for our everyday life, whether it be copper, palladium, oil, across the board. And God forbid it infects the food market. So now you're talking about fertilizer and related.
So interesting. Final question would be, what do you think is the best capital allocation for someone that's a Web2 native and someone that's Web3 native? Obviously not financial advice, none of it was. But I'm just interested to hear your opinion on it. And then I would say medium to low risk for people that are actively trading. So just don't give me the dollar cost average one because that's boring. Just add some flavor to it. Sprinkle some meme coins on top of it.
I mean, if you want to do degen, I place my bets on ordinals and runes, and perhaps NFTs around that as well. I think that if there's going to be a hype cycle, that would be the area. We saw the Ethereum hype cycle in the last cycle around NFTs, and there's multiple reasons why it could work. The reason I think it could work is because it doesn't work. Bitcoin DeFi doesn't work, right? In which case, these things are very valuable because they're the one of a kind, right? So you're not gonna build on top of them again. So that's kind of my
a very contrarian take.
My dreamers thesis on talking my book a little bit as to why I'm around Bitcoin. But of course, just having Bitcoin, I think, is still going to be the best performing major asset. It'll beat the Nasdaq. It'll certainly beat the S&P 500.
How much would you allocate to it?
Good question. Yeah, I think that if the institutional allocators who are avant-garde talk about 5% of your portfolio being in digital assets, we'll call crypto, right? And by that, they usually mean Bitcoin. For me, it's 20%. So
I keep hearing that number. Funnily enough, I keep hearing 20, 25.
That's where I'm at. I think it makes sense. The reason it makes sense is because, especially people who have been lucky enough and fortunate enough to accumulate a little bit of wealth in their lifetimes, we have the benefit of having what I call a barbell portfolio, which is that we can have the safer assets that generate us income, and then we can punt around with not all of our portfolio to effectively replicate what would have been 100% equity risk. You don't need 100% crypto is much riskier in traditional form, right, than 100% equities. So a 20% crypto allocation roundabout approximates what would have been a historical allocation to equities, I think.
I actually have one more question.
Yeah,
keep saying final question. What do you think are 2 or 3 companies that people should buy to have this like barbell portfolio. And a company that I personally have invested into and it underperforms so much, I think it's a good time to buy right now. Not financial advice. And I was so well versed on giving all the reasons why, but I haven't done my research for some time now, around 6 months. But it's called SCVS, and it's like a US based. It's healthcare and
Oh,
drugs.
sure.
Yeah,
Yeah.
yes. I was just wondering whether you could just give me a few more that you have personally invested into or you're looking to invest.
Okay, not financial advice, but
Your lawyer will love you for it.
yeah,
Just
exactly.
disclaiming that.
Not financial advice. Um, let's put the copper mining thesis aside because I think that's a pretty well vocalized thesis. I'm long uranium companies. Okay, so maybe that's one you haven't heard, but I have no doubt that the energy needs of artificial intelligence will be exponentially higher than humans at some point. Now that could be down the road, but AI is an energy hog. It's a commodities hog. And so as we move into this brave new world of AI, I think that we will be competing against AI for resources, and that includes energy in particular. And there's no doubt that nuclear energy, at least as we understand it today, is one of the best, most efficient, cleanest forms of energy that we can have. And it's severely underutilized globally, maybe with the exception of France and a handful of other countries. But in the United States, the regulations to bring up a new nuclear plant are ridiculous. So I think that uranium is going to have a lot of purpose over the next few years, and it is in short supply. And that's uh, my speculative call in the energy markets that I think a
What
lot
do
of
you
people are
think
still not looking
about
at.
what do you think about lithium? Because I've invested into Albemarle, which is the biggest lithium producer in the States.
Yeah,
Another stock that has been going down lately, funnily
yeah,
enough, I've accumulated some more,
yeah,
but I'm not 100% sure whether I'll hold it for the long run, just 5+ years. That's the long run. 5 to 10
yeah.
years is the long run for me. But I think that there will be some potential, especially with like EV vehicles in the next 3 to 5 years. Probably a good trade.
I think all the metals, as I was mentioning before, copper, palladium, platinum, lithium, rare earths, all of these are absolutely in play for this cycle. I'm going to make it even more, a bolder statement that if there is not a commodity cycle with the set of conditions that we see in the world today over the next 1 or 2 years, there will never be a commodity cycle again.
That's
Okay.
a bold
This is
statement.
the most perfect set of conditions that I've ever seen for commodities. Um, I was around trading as a fund manager, fund analyst at the time, 2003 to 2007, which was a pretty decent commodities bull market, emerging market, 2003, 2008, before the financial crisis. The conditions that I see today are even better and more
Oh
long
wow.
lasting. Yeah.
I'll definitely look into it.
Yeah.
And the final question for today, I promise you, is what's
Final.
your Bitcoin price prediction by the end of the year, 5 years from now, 10 years from now?
Bitcoin end of the year is at 120,000. Bitcoin at the end of 2000 and end of this cycle, we'll say, which I think is probably takes us to Q3, Q4 2025. I'm going to say 200 to 250,000. And in 10 years, a million easily.
Whoa. Thank you so much for this again. Such a pleasure talking to you.
Thank you. Thank you, Evan.